Yo guys, I am super excited to do this video. You're welcome back to this channel. I want to show to you how I took this trade and I had over 200 pips. Okay, right now I want to use this opportunity to thank all my subscribers for their love and their likes and comments. So if you're not yet my subscribers, please kindly click that subscription button and you're going to learn a lot from this channel. All the things that I'm doing here, I'm doing it with my mobile phone. Alright, so if you want to learn how to trade with your mobile phone and you do your technical analysis with your mobile phone, this is the right channel for you. Okay, so let's go into the video. This is what I saw on my weekly time frame. I saw an implied fair value gap on my weekly time frame, and if you are an ICT trader, you know that an implied fair value gap is very powerful. It's very powerful. When you see it, it's very powerful. So when the market was approaching this point of interest, I said to myself that this is a very good point. I didn't even notice that that was an implied fair value gap there. All I was seeing on this weekly time frame was this mitigation block. And this mitigation block was really visible on the daily time frame, and we are going to go to the daily time frame immediately. So this is what I saw, and I said to myself, I'm going to take this trade. Once it gets to this my point of interest, I'm going to take this trade. So let's go to the daily time frame so that you can see that mitigation block very well. You can see that mitigation block right here, and it confluence with that. Look at the mitigation block here. It confluence with that implied fair value gap, and to show you this is a very powerful institutional reference point. So it confluence with this implied fair value gap, and I noticed that the market came here and gave us a failure swing, and that is where the market has traded into. So I was waiting, and you can see on the daily, this is our last break of structure, our last bullish break of structure. This was our last bullish break of structure, and when the market has picked the external range liquidity, it will come back to the internal range liquidity to look for its food. So when I saw it, I said to myself, okay, and the market traded into this institutional reference point. Look at what the market did. The market came like this, break structure, pick out this liquidity above here, above this high, picked it, and took me to that institutional reference point. So when I saw that institutional reference point, I said, okay, this is an opportunity for me to take the trade. This is an opportunity for me to take the trade, because I know if it has picked this institutional reference point and it is into my POI, definitely the market will come back to internal range liquidity. So I was waiting for it. I was watching it like a bird. I was watching it like an eagle. So I went to my 4-hour time frame, and I noticed something. I was saying to myself that once the market break a structure on the 4-hour time frame, I'm going to take the trade. Once the market break a structure here on the 4-hour time frame, I'm going to take the trade. And already when the market break a structure, we have to wait for it to come back to the internal range liquidity also before you can take the trade. So when I saw this movement to come back to the internal range liquidity, I will take the trade. But my plan changed. Why? Because I had to go to my 15-minute time frame. I was watching this retracement carefully. I was watching it carefully. I think it should be in 1 hour. No. Yeah, I think it was in 15 minutes. Let me check 15 minutes. Yeah, this is what I saw in 15 minutes. This is what I saw in 15 minutes. Look at it. Look at it. This last, let me zoom it so that you can see. Look at what I saw on the 15-minute time frame. The market breaks structure here. The market broke the structure from here, boom, from here, from this very point. The market broke structure. So when I saw this in the 15 minutes time frame, I was like, wow, this is my opportunity to enter. And look at where I took the trade. Look at where I took the trade. I took it from this big fair value gap. You see this big fair value gap, and this is a very nice opportunity for me to enter the market. So the market was, oh my god, I was so excited that day. It's better for you to have one setup in a week than having many setup and losing your money. So when I saw that, I said, okay, I'm going to take from the middle of this, this consequent encroachment. The 50% of this big fair value gap is consequent encroachment. So I had to take it from there, and my stop loss was just above this high. My stop loss was just above this high. My stop loss was just above this high. Yeah, my stop loss was just above this high because I didn't want to. I wanted to go and rest because I know that this trade will take me days. This trade will take me days. So when I entered into the trade and it was triggered, look at how where it took me out. Look at where it took me out. I was watching this trade over and over again. This is where I exit the market. This is where I exit the market. Look at here. Look at this place. You also see a breaker block. Let me go to 4 hours so that you see. You see a breaker block here. For those of you who don't know what a breaker block is, I'm going to do a video to differentiate between breaker and mitigation block because I just mentioned that in this video. Look at the breaker block here. This is the breaker block. Look at what the market did. This is my breaker block. So when I saw this, I know that definitely the market will also react to this breaker block. So I said that is my exit point. That is where I'm going to be out of the market. Cut. And the market just did exactly what I said. This is over 200 pips, 275 pips. Look at it. From there, just few days, like I think it took me about a week or so. Just few days. So the market, I had to go out from here because of that breaker block. This breaker block, I had to go out from that point. And that was that. Just very simple analysis. And if you can have this setup like 4 times in a month, if you have this kind of setup for like 4 times in a month, just forget about it. Just forget about you are okay. You are okay. You are okay trading for that month. If you have this setup just 4 times in a month, you are very, very much okay. So that's the end of our video today. So if you are not yet a subscriber, please kindly subscribe to this channel because you're going to learn a lot. All these things I'm doing it with my mobile phone because a lot of people ask me to do this. A lot of people ask me to do this on my mobile phone. You are not limited, all right? You are not limited. So don't say trading is difficult because you are using your mobile phone, you don't see much data, you don't see clearly, you don't see boldly. It's just for you to have the right knowledge, to apply to what you can see on the bigger screen. You can see it on the smaller screen and you can apply that same skills that you've learned. All right, so thank you so much for watching. Don't forget to subscribe to this channel. Do it now, do it now, do it now. All right, thank you. Bye. See you in our next video.